Welcome back. We have one more set of strategies to offer you, and this one comes from Vinod Sharma, Head of Business Private Client Group at HDFC Securities. Good morning, Vinod. Thank you very much for joining us. So what's the trade for the day and for the week? Would you be bullish on Nifty?
Yes, definitely. Good morning, Lata, Sonia and Anuj for the first time this month. Okay. We are bullish on the Nifty, and we feel that the call writing has now gone up to a level of 11,200. In the Nifty, we have resistance coming up at 10,985 and till all the way to 11,040. Once this band is crossed, we'll close the series, January series, much above 11,200. That's our take. So any dip that we see, a 30-point dip from the levels that it opens, is a good dip to buy. And my strategies, we have as usual a combination of large caps and mid caps, and most of them large caps in fact. So Bajaj Finance is the one that we like, and we have seen OI being added on the first day, and we are suggesting to buy the 2650 call at 94, stop loss at 70, target of around 140. Canara Bank seems to be the best bet among the financials now, with 8% OI being added on Friday, 2% rise in the open interest. I'm buying the 280 call at around 12, stop loss at 9, target of around 18. And Manappuram is my third financial call. I am buying the 95 call in Manappuram at 3.5, stop loss at 2.5, and a good target of around 6.
Okay, Vinod, hi, good morning. Happy New Year to you in advance. Only financial calls today or anything else that you're looking at as well? I
have capital goods also, BHEL and Pharma. We have seen the capital goods as a sector going up, and BHEL is a stock that we like. I'm suggesting to buy the 72 call at around 3, stop loss at 2, target around 5.5. This is the highest close since 2nd of November. The oscillators are also positive. Larsen I have recommended earlier also. So the whole sector is good. BHEL looks technically well placed. Glenmark is the pharma stock which I am picking up. Although the pharma sector per se bottomed out in the month of May, it has gone up by 12%. But this is the stock, Glenmark, which has done the best. It has risen almost 41% from the lower levels. I'm still buying the 700 call at 25, stop loss at 20, target around 35.
Okay. Vinod, good morning. You spoke about call writing. 10,950 has been a huge resistance for the Nifty. You see this being taken out in this series?
I think 11,200 will be taken out in this series itself, primarily because the people are still worried. We have not begun the series with a very high open interest, and the series we just lost 0.7% as against 7% rise that we've seen in the month of November.
All right. Okay, thanks a lot for joining us, and have a great new year, 2019 that is. But moving on, IT has been one of the best performing indices this year, but Nirmal Bang has come out with a report wherein they have turned cautious on the IT sector. The downgrade has come in earlier given the weak global macro setup. To discuss the other key reasons for the downgrade, Girish Pai, the Head of Research of Nirmal Bang Institutional Equities, joins us now. Girish, hi, good morning, and thanks so much for joining us on the show. Tell us a little bit about why you've turned cautious on the sector, and is it only on the large cap IT stocks, or would you even be cautious on mid cap names now?
Yeah, so when the year started, when 2018 started, market had expectations that we're going to see a strong pickup in growth and a broad-based pickup in growth, and that's going to be sustainable. So we actually saw through the year a PE multiple expansion for the sector, and earnings, in my opinion, have actually not risen very much if you take the INR effect out. So, and if you look at the three things that the market was expecting from the sector: strong growth, broad-based growth, and sustainable growth. On all three parameters, I think it's kind of failed. The growth in the sector has largely been, it's been modest. I think it's been in the large caps, it's been more TCS driven. And sustainability is questionable right now because we believe that 2018 the growth pickup has actually happened on the back of the tax reform agenda of Trump, which has led to capex picking up in the US. And we see that trail off into 2019, and already we're seeing signs of weaker growth in the US. So we've had the auto sector in the US kind of coming off. We've had housing sales come off. So a lot of indicators seem to be pointing to a weaker 2019 versus 2018 from a macro setup perspective, which I think is going to be negative for the IT services sector. So we're not looking at just the macro setup, we're also looking at the banking and financial services sector in the US and elsewhere, where it constitutes almost 30-35% of revenues of these companies, and a flat and an inverted yield curve will actually be negative for the banking sector, because you typically borrow short and lend long. So there could be some earnings pressure coming through from the BFSI side. Then the whole lot of other things that we talked about in the report in terms of automation picking up a lot more steam compared to digital. So we think that automation is gaining scale, while digital is also gaining scale. Automation gaining scale will mean that there's going to be more compression on legacy services. We think that digital in India, from the Indian service provider perspective, is not really focused on the front end, which is consulting, your digital experience and stuff like that. It's more on the back end. So we've not been truly beneficiaries of the digital wave, so to speak. Now, coming to the large cap versus mid cap trade, we prefer large caps over mid caps. We think that mid caps have had a very, very large run in late 2017, early 2018. We think they are very risky business models that they're currently running at. Some of them actually had increase in client concentration through the year. In fact, through the last couple of years, and we think that they could come under pressure going into 2019 and 20. So our call is that 2020 will actually see a soft landing in the US. So we're calling for a between 0 to 1.5% kind of real GDP growth, which we believe will lead to a situation where industry growth is going to be 0 in FY21. So that's the away from consensus call that we're taking. Whereas I think the rest of the street is assuming that you will probably see mid to single.
Do you not buy any of the ID stocks, or would you still persist with the TCS and or any of the? So
right now we do not prefer TCS. We think TCS probably got the best business model, probably the strongest player in the market right now. But from a valuation perspective, we would rather prefer an HCL Tech and maybe even Infosys right now. So the only
L&T Twins did extremely well in December. I mean, they were the outliers actually.
So so those companies keep moving. I mean. Stock performance on a weekly and a monthly basis keeps
they are changing. 65% higher on the year as well.
Yeah, could be. I mean, I think TCS also
and
done
10% higher on the month.
Yeah, could be. I mean, I'm not disputing all that, but
no, but you still don't want any of the.
So I wouldn't see, if you ask me, if you put a gun to my head and say which mid cap stock to actually pick through a downturn, if a potential downturn in the US, I would probably pick LTI.
Okay.
I think it's got a fairly high quality management team in place. Which I think will be good from a long-term perspective, but will the stock suffer if there is a downturn? I think it will.
Okay. Well, finally, this is one question everyone has to answer today on the channel. What would be your pick of the pack for 2019, even if it's like for the first quarter or the first half?
I think it's a consensus call, which is ICICI Bank.
Okay, fine.
Okay, no, I had one question before I let you go. You spoke about earnings pressures from BFSI, but none of them spoke about that in the quarter gone. No. I mean, TCS, in fact, saw its revenue accelerate specifically in the BFSI segment. So
the commentary on BFSI has been very mixed across various players. So Infosys and TCS have given positive commentary, but if you look at an Accenture or a Cognizant and some of the other players, the commentary has been not as positive. We're actually looking forward. We're saying that a flatter yield curve and potential inverted yield curve will actually be negative for banking, and therefore the spending by these companies will be muted going into 2019.
Yeah, I take your point. The recession talk actually started after October, and Powell saying that number of rate hikes are going to be fewer. So perhaps that's the call for 2019. Vinod, I kept you back exactly for that. You have to give us one 2019 gift for our viewers.
I think L&T is going to be a good pick. It is not going to beat the index by a very huge margin, but definitely I think the time has come, because it is living up to its talk of increase in margins, ramping up the order book, and also selling some of the stocks that it has in order to build the reserves, and also to, so to say, to buy back the stocks. So I think the investors are going to reap a hefty return this year.
Okay. All right, gentlemen, both of you are actually voting for India in that case. I mean, both of you are going for domestically oriented stocks.
Of course.
L&T and
people are highly, we like this fact that people are disoriented. They don't want to put in money ahead of the elections. We like this scenario, and we are building up.
Okay.